Feroze, welcome to ET Now. My first question to you is, do you think there has been enough steps which has been taken as far as mutual funds is concerned?
Yes, I think enough steps. I would say that there is progress, significant progress, and I think all of these are very important ones, which you actually very well articulated to the audience. So to answer your pointed question, yes, this is a great step. Of course, when you're speaking of front running and the responsibility of management is very critical. I think that's been amended. I personally think that that does not imply that there have been several instances of front running. But I think SEBI's microscopic management for the benefit of investors, I think is very apparent in this board meeting. And I think in spite of having very few instances of market abuse, still wanting to make sure that the responsibility is clearly on the institution and the management is a great news of further regulation for the benefit of small investors as we keep penetrating into the deeper parts of India on mutual fund platform.
Feroze, I want to understand the applicability of these norms. Now, once you say the management of AMCs will be responsible for any of the wrongdoing, how will it work in practicality? Because will you just make board responsible? Will you make just top 2 or 3 responsible? How will it work out in practicality according to you?
See, I think the responsibility of management or an institution is about putting right processes. Now, one is putting processes in place. I think that's the most important responsibility. Can you still have some needle in a haystack? That can happen. Can you put the CEO responsible for every employee's action if there are 2,000 employees? And front running has, of course, the case of COVID and work from home. All that had diluted the checks and balances marginally, especially during COVID period. So I personally think having a robust process and following that process can be an institutional or a management responsibility. I think very well it is being done. I think this will improve the process and its implementation that much more.
One question I want to ask you about NCDs. Now, this is some market which SEBI has been trying in past that this should pick up. Reducing the size of investments in NCDs per se to rupees 10,000, do you think it will attract more retail investors?
I think there are two prone benefit to it. One is, of course, the spreads in the debt market today are very high. Because if large corporates are also borrowing money at 9.75, 10% for 5 years as we speak, and the government paper is at 7%, 3% is a great spread. Now that is being capitalized upon by ultra HNI and HNI investors. I think retail getting that spread makes so much sense. And the spread will, of course, compress if retail comes into it. And I think that there's dearth of capital in the debt side, and I think that will address. But the more important bit is it helps one mitigate risk. See, if it's 10,000 rupees, you don't have to buy one NCD, you can buy 5, 7 NCDs. Credit risk is one of the most dangerous risks. So you would not want to buy, if you have 1 lakh rupee, you would not want to buy one debenture of face value of 1 lakh with one corporate. Then it is make or break for you as a retail investor. But if it's 10,000, you can buy maybe 5 different corporates, 20,000 each in the form of 2 debentures. So I personally welcome this move from a perspective of not just making it affordable, making it diversified becomes a very important collateral benefit of this move.
Okay, thank you so much, Feroze, for joining and explaining the reasons why SEBI has taken these kind of steps.